Hey traders, Todd Gordon here with tradinganalysis.com. This is CNBC's Trading Nation. Traders, today I want to take a look at setup in Netflix. We are bumping up against a key technical resistance level. We're also heading into earnings on January 18th. It looks like we should see higher prices in Netflix. So let's dive into the daily chart. You can see that we have tried the $130 area several times, and it looks like with a solid earnings report and a continued rally in the stock market, we should be able to punch through that $130 mark. Now, before we dive in here to the specific trade, I just want to talk about earnings a little bit, look at the option chains and figure out what the expected movement is here heading into that key earnings on the 18th. So as we go into the option chain, the options that will have the biggest, will be impacted the most around earnings will be right up against these January 20s. These happen to be the monthly options. Remember, earnings is on the 18th. So what I want to do is just show you the expected movement, or what we call the implied volatility heading into earnings. So as we drop the option chain down, and it looks a little daunting, but it's really not that bad. What you're looking at here is this IV column. That's implied volatility. And all implied volatility means is just anticipated up and down movement. It's not a one-way directional trend in price. It's just high to low range. The greater the expected high to low range, the higher the implied volatility, the more expensive options are, both puts and calls, because the likelihood of various strike prices becoming in the money is increased. So I want to compare that, and you're looking at about a 53-54% implied volatility in the monthly options. If we go back just 1 week to the January 13 options, compared to the 52-53%, look where we are now. We're at about a 31 to 30% implied volatility. So you can see in 1 week, the expected movement in Netflix increases by 20%. So as we move back into the monthlies that will contain the earnings report, how much expected movement will we see? Well, there's a very simple way to do this. Take the current price, which is $127 right now in Netflix. Look at the $127 strike. So the $127 strike is going to be right here. And what we're going to do is add up the value of the call, which is trading at about, call it $7.95. And we're also going to add up the value of the put, $7.80. So altogether, you're looking at about, let's call it $16 just to round up. So what that means is options markets are essentially pricing a $16 move to the downside or the top side around earnings. That's the expected move, or what we call the one standard deviation move. Statistics class aside, to cut to the chase, that means there's a 68% chance, according to the options market, that will be about $16 higher or lower into earnings. Added to the current price of about 127, that's going to give you 137, just about 143. So as you look back at the chart, we might see Netflix go from about 127 possibly up to 143. I'm not going to look for that much of a movement, but what I'd like to do is put on a call spread heading into earnings that will take advantage of a move higher as the stock is potentially bid up into earnings. And also, we could expect implied volatility to increase, which is uncertainty heading into the earnings report, which will generally increase the value of puts and calls. So that will help us with a call debit spread. So the trade I'm looking to do here is let's go out and let's go ahead and buy a 130, 135 call spread. I'm not looking to get all the way up to that 140 expected movement. Let's not be too greedy here. So I'm going to go ahead and buy the 130 call, add a leg. Let's sell the 135 call. We're going to be able to do that for $1.93, which is $193 per option spread we're trading, giving us a potential reward of $307. So let's put that at the mid price, send the trade, and we are working. As always, guys, we're going to use a 50% stop loss rule. If that $1.90 that we're trying to pay gets cut in half, we will move the trade off, we'll stop out and simply move on to the next trade. Otherwise, we're going to try to carry that into earnings. Okay, there's a lot there, but that's using options markets to price their probabilities and expected movement heading into earnings for Netflix. For CNBC's Trading Nation, I'm Todd Gordon. Good luck in that trade. Be sure to follow us at Trading Nation on Twitter for updates on this trade, as well as all the other positions we're working. See you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.